All right. How you guys doing today? All right, that should be better. All right, we're gonna go ahead and give everybody a few moments to hop on. My name is Lionheart Doyle. I am your trading instructor tonight, and we are going to cover how to create your trading plan. There's a few different psychological concepts that you want to understand in trading in general. It's not just about making money, it's more about mastering yourself, and the money will be there for you. So I'm here for you guys. If you guys have any questions, just want to do some good housekeeping. If you aren't receiving any of the Google invites, please let me know. If you were not getting properly notified for these class sessions, so that I can make sure that you are on the list to basically get those notifications to your phone or email or however you receive them. All right. And go ahead and start sharing my screen, and we are going to go ahead and hop into it. Hope I'm on the right session because I don't see anybody here right now. So let's see. I get that figured out. Okay, yep. No, we are on the right session. All right, cool. So like I said, hey, what's going on, Ian? So tonight we're gonna be jumping into how to properly create your trading plan. And I want to first kind of go into the importance of having a trading plan. Out of everything that you do and out of everything that you learn, you should always be able to kind of fall back on your trading plan whenever you're, feeling some kind of way, whenever you're emotionally distressed or whenever you're excited about a trade, whatever the reason is, always going back to your trading plan really helps you stay centered in these markets. And that's vital when it comes down to, placing the next best trade, which is ultimately what we need to be doing every single time. It's the equivalent of like having a Lamborghini with no brakes or no wheels. You might have the best car out, but if you don't have the proper structure, your trading, which is your trading plan, it's going to stop you from really being a successful and consistently profitable trader. All right, so I'm going to go ahead and get into it. If you guys are ready to get things rolling, ready to get your account set up, please go to lionswallstreet.com and I will go ahead and be more than happy to set you up with a membership. And also, if you need to get your account set up and funded, let me know. I can help you guys out with that as well too. If you're watching this recording later and you have any questions, feel free to email us at info@lionheartmotivationfactory.com. All right. So, uh, what is your why for trading? You got me. So that's ultimately the main focal point of what I want you guys to focus your trading plan around, because that's going to pull up a few different questions for yourself. I.e., are you trading to get out of debt? You might only want to get, $50, $25 a day. And that's super understandable and super easy to do. But if your trading is for me, to break financial generational curses, you got to go for the whole enchilada. If it's just to provide for a family, there's different levels of where you come in this game at, and you want to know that you're hitting your target when you're entering these markets and you're not over trading or under trading, or at least trading with intentions. You got me. The super important. So understand what your why is for trading. I think it's super important to just kind of go into that whole mission statement of why you are doing what you're doing. So I'm going to be taking some notes as I'm going teaching these classes with you. But my why for trading is the fact that I'm breaking generational curses, financial generational curses. That's enough for me to teach these classes. That's enough for me to hop in these markets every morning. It's something to keep me disciplined, something to keep me focused and keep my arrow in the right direction. You got me? So I'm gonna run through these slides. And if you guys have any questions about any of the slides that you guys hear, all you got to do is tap in with me. But just so you guys know, we are going over trading plans. You want to take notes. If you don't have pen and paper, this is that time to grab it. I'm trying to be a little long with it so you guys can have some time to grab your pen and paper. And you want to state your name and you want to say what your trading why is. So my name is Lionheart Doyle, and I am trading. My why for trading is because I'm looking to break financial generational curses. So whatever that is for you, make sure you write that down. Get it laminated, keep it beside you. Your trading plan is supposed to be right beside you at all times. So if all else fails and you get lost, whatever reason you got distracted, you can just look to your right or look to your left, and you have your trading plan there for you so that you can continuously be profitable. All right. I'll do this. What's going on? I'll get next. There we go. All right. So the next thing is, how often are you going to trade? Right? How often are you going to trade? And while you're trading. All right. So over trading is a thing. All right, and excuse the typo on the what's name, but nonetheless, over trading is a thing, and you want to understand. I was talking to I think it was, or I can't remember who I was talking to. I think it was earlier today, but nonetheless, what I'm saying is there's a pip count that you want to be able to get every single day. So if your goal is to get 25 pips every single day, no matter how you get that 25 pips, whether you break that in 5 pips per trade that you make, however you get your 25 pips, you never have to get more than 25 pips. You just have to consistently get 25 pips, right? And so if you're consistently getting 25 pips, the only thing you necessarily need to change is your lot size. You got me? So that's really the where the over trading can happen. So you want to know how often you're going to trade. You want to know if you have a limit for yourself. If you're saying, hey, you're only going to place 10 trades, because what ends up happening is when you over trade, you end up doing more work than is necessary, number one, but also you also have more losses, more potential for losses. So this is one of those games where you want to get in the market and get out, and you shouldn't be over trading just because you have extra time on your hands. So that's another level of being disciplined. So if you're saying, hey, you're going to stick to 10 trades, 5 trades, whatever it is, make those your best 5 trades possible. And it makes you methodically think about how you're entering the market. All right. All right. The next thing that you're going to think about, and I just want to be upfront with you guys, I teach you guys on gold, right? Clearly there's 1,000 of the markets for you guys to get into. You don't have to trade gold. Gold is just where I'm comfortable at. The markets that I've seen over the years and seen how they move, gold is what called out to me. At any point in time during these classes, or at any point in time during your trading career, if you feel like you want to go look at a different market, feel free to do so, but just understand your market's volatility. That's what really made me comfortable with gold, because at certain times it moves slow. I saw that even when it wasn't moving a lot, I could make money. Even when it was moving a lot, I could make money, and that allowed me to be like, okay, hey, this is something I want to stick on. There's peers out there that when you trade them, they might be consolidated for 2-3 days, depending on what it is. So find the market that works for you, and then also there might be markets that move way too much for you. It's too much volatility, and it's hard for you to kind of enter a trade because the market's moving so fast. So find the market that is for you. You're coming up with your trading plan. It's supposed to be dedicated and catered to you and your personality type. So I'm going to make sure you guys understand that completely. All right. Now, another big thing, once you guys understand, is what session are you going to trade in? There's a few different sessions. Actually, I'm going to go ahead and pull up graphic for you guys real quick. Let me stop, or how do I just escape out of this? Yeah. Where is it? Boom. All right. So if you guys can see the screen right now, in a nutshell, there's a lot of different trading sessions. This is off of my Fair FX book. You can go on the website, and it has a lot of tools and resources for you. You can also trade from here. They have their own broker. I don't use them, but I do like some of the tools that they have that helps me get more information on the markets. Right. So Toronto, it literally has current time, opens up at time. I trade New York session, so I'm mainly here. I'm more likely trading New York session. Back in the day, I'm talking about I was trading 24/7. I started off over trading just because I was so excited to get in the game. And I'm like, hold on, you mean I can make money 24/7? That's ridiculous. That's crazy. It's unheard of. So you end up over trading when you get excited, and it takes away from some of the discipline. And sometimes you just place trades just to be placing trades, and you want to be intentional with every single trade that you make. All right. If you look right here, this is kind of some of the volatility hours. Just a lot more volatility than most. Certain hours. Like I said, I was going over a trading session this morning, and you can see the booms and the growth and the volatility that happens hour by hour because of a bank opened or multiple banks opened around the world. You got me? So understand which trading session you want to trade in, depending on what time schedule you have, where you can actually dedicate yourself 100%. That's really what you want to focus on, is being able to dedicate whatever time you're going to trade. You want to be able to dedicate yourself 100% to that time so that you're being intentional. All right. Go back to the slides. All right. Another big thing. what time frame are you trading on, right? What time frame are you trading on? And that makes a huge difference, because if you're one of those people who, Monday morning, that might be the most free time of your day, of the week. So for some of you guys watching this video, if you have a 9 to 5 or something and your only day off is Monday, you might need to hold a trade for a week, just because you might not even have time to check on it. Even though it is super simple, you just, open your phone, look at trading view on your phone and go back to what you were doing. But sometimes, in the mix of things, we forget to even do that. So understand what time frame you're trading on. So if you're trading on a 1 week time frame, that means you plan on holding that trade at least a week. If you're on the 1 hour time frame, you're probably a scalper like myself. I'm looking to get in and out the markets within 1 to 4 hours. I don't like holding trades long term. I will if I have to, but ideally I like to get in out the markets, because my anxiety rises if I go to sleep and I have trades open. It's sometimes it just, I think about those trades while I'm sleeping. It makes me not sleep. So that's my personality. It's not everybody, but that's where I go with it. So you want to know your time frame. You got me? So yeah. Any questions about that so far? And we'll get more into time frames and things of that nature later on, but that's definitely something to consider. All right, what time frame are you trading on? And the other part where that really makes a difference is how should I say, your entry points, right? You don't want to be making entries on, if you're a weak trader, you don't want to be making entries on the month. You want to be making entries on the hourly time frame. You got me? Knowing when to get in. You got me. Always break it down to the smaller time frame so that you know when to get in. Of course, the bigger scope of things, if you're a weekly trader, then yeah, you're gonna look at the week for the big picture, but you want to know when to get in. You got to break down the time frame and get down on a smaller time frame. All right. All right. Now, the another big thing for you guys is what would make you exit a trade, right? How I teach to exit trades is when you start getting resistance, when all of a sudden the market is booming. Great example from today from gold. Gold was jumping up, and then all of a sudden you could tell it was having some trouble breaking over a certain threshold, and it took a little while. And when it did that, it let me know that, hey, some of the bullish momentum is starting to die down, and that means I need to start either looking to make an exit, or that means I need to either double down on my position. You got me? So it's going to be one of the two, because if it does end up breaking the trade, or breaking the resistance barrier that is currently there, then I'm more likely I'm going to double down. But if I'm talking about going up, retesting, coming back down, going up, retesting, coming back down. As soon as it goes up that third time and retest, more likely I'm just going to get out the market, because worst case scenario, if it comes down, I'm just going to get back in. I don't want to lose my profits. So I'm going to make sure that I exit, number one, when it invalidates my trade, meaning whatever I originally thought was going to happen. If it stops doing that, right, I'm going to exit my trade. But also, if there's going to be resistance at a certain level, I'm going to exit my trade. And if I see continuous resistance, you got me. You want to go with the market. The market isn't something to really predict. It's something that you go with. You adapt to what you're seeing, what you're currently seeing on the charts on TradingView or wherever you watch your charts at, and then you make an adjustment from that point. You got me. And it doesn't mean you have to close your trade out every single time. And you might just want to take a lesser position. Let's say, you have too much of a lot size. You can go from a 5 lot size to a 1 lot size very quickly. And I'll show you guys how to do that in class as well. All right. What is your risk management, right? So risk management, if you are on $1,000 account, number one, you want to know what you're starting off with, right? So if you're starting off with $1,000 account, they are continuously saying, I'm saying, everyone is going to tell you this, 2 to 3%. You got me, especially in the beginning, 2 to 3% per trade. So out of that $1,000, yes, that's very small. So that's why you literally want to do a 0.01 lot size. So it stops you from blowing your account. Because when I tell you you put a 0.50 on a $1,000 account, it can be blown within an hour. You got me, and that's not what you want. So risk management is super important. We're going to get deeper into risk management and the different ways to kind of go over your risk, and understanding that even if you have a good trade, if you have the wrong lot size and you're risking more than you should, called over leveraging, right? If you're over leveraging, that can cause you to blow your account. So just keep that in mind while you're trading. Risk management is very important. 2 to 3%. Just remember 2 to 3%. Stay in those guidelines. Some people go 2 to 5%. It just depends on if you're more of an aggressive trader or if you're a conservative trader. You got me? All right. lastly, not lastly, but how are you going to document your trades, right? Documenting your trade history is super important. Whenever I'm taking trades, most of the time but not during my trading session, but afterwards, I'm gonna go back and look at my trade history and be like, okay, I took these trades at this price. Why did I do that? I'm gonna go question myself. I'm gonna go look in the mirror and I'm gonna go basically get into my reflective mode and think about how my trading day went. Why did it go this way for myself? What did I do that was making me successful? What did I do that wasn't making me successful during my trading process, right? So all these different things is what you need to do continuously. And you don't want to, you don't want to overwhelm yourself by thinking about what happened in the past, because what happened in the past is yesterday's news, right? You definitely want to be able to move forward. But if there's room for growth and there's something that you see that every time you make a trade, you're making trades out of impulse, or you're making trades because, oh, the market was booming, or if you're making trades because you were scared of missing out, why are you making these trades? And documenting your trades will help you do that. So FX,
FX,
you got a question?
got a question? Yeah, do you usually like write yours in a notepad, or do you do it on like maybe a app or something?
All right. So
Right,
FX
so
books.
FX
I need
books,
to kind of get you some more
I need
information on that, but that's a great question. Let me see if I can get to it real quick. But FX books actually has a journal that you can use. Let's see. I gotta check it where it is, because I don't use FX books. You can use an Excel sheet. It just kind of depends, but you want to basically mark the price that you got in at. You want to mark the where you got out at. You want to mark your stop loss, and you want to mark your take profit. Those four things are going to allow you to just see over time whether you're putting in the right ratios, whether you're rushing in the trades or not. It's a lot that you can tell from a person just by looking at their trading history, and that's why getting into your demo accounts is super important. The other area where, let me see, the other area where you can get to it at is in the broker. If you go to accounts and you go to the actual account that you've been trading, there's an area in there for you guys to basically look at the trades that you've made. So you don't necessarily have to write them down, but if you're gonna put it over into an Excel sheet, that's what I would definitely do for yourself. You got me. I have another laptop over here to show you some things, but it's all good. We'll get to that part as well too. But my FX books has I want to find out where it is. Yeah, I gotta add a portfolio on here, I believe. I don't use FX books unless it's like for tools. I like it for the news. I'll say like that. A lot of different things are going on in here at all times, but they're always trying to promote stuff to you. That's the part I don't like. But a lot of different things you can read up on. And honestly, one of the big things, just to let you guys know, getting a sentiment of the market, you can do that very easily by just going into Google, type in the pair that you are wanting to trade, and then putting an alert on. So anytime gold, anything happens with gold, XAU, USD, anything happens with that, I get an alert sent to my phone with the article or whatever it is, for me to read and just stay current with the events that are going on with the gold market. So that's another thing that you can use to add. And you might say something along the lines of, "Hey, I read an article before my trading session, and it made me trade differently because I was expecting bullish markets, and all day it was bearish." And these are the trades that I placed to kind of go with that. And it doesn't mean that your trades were wrong. It just means that your trade pattern was not conducive to what was going on in the markets at that current time. All right. Um, right. So yeah, what is your risk to reward ratio per trade? Did I answer your question, Kane? We
Yeah, you answered it.
Okay, we can go a little deeper into that because I didn't want to get through the class, but we can go a little deeper into that maybe tomorrow morning when we start trading again. So I can kind of give you a little bit more insight on that and where how your Excel sheet or wherever you want to write it at should look. But yeah, what is your risk to reward ratio per trade? I like to ideally get a 1-to-4 or 4-to-1 ratio, meaning that if I'm risking $10, I should be looking to make about $40. You got me? That's a 1-to-4. Now there's people out here who get 9-to-1 ratios. It just depends on where your skill level is at, but I'm always good with the 4-to-1 ratio. And if I'm scalping, I'm kind of good with a dollar amount, but if I'm not scalping and I'm looking to place long-term trades, I'm always looking to at a minimum 4-to-1. If I don't have a 4-to-1 trading risk to reward ratio, then I don't take the trade. And that's one of the things that where you definitely have to have discipline, because just because it's a great trade, or it may look like a great trade, but it doesn't fit your 4-to-1, then it's not going to work for your trading plan. So a trading plan is literally, it's going to be auto and self-correcting yourself to basically make the next best trade. You got me? So if you're making 10 trades, right? And you have a 4-to-1 ratio, even if you go 50% and you only lose that, if you follow your 41 ratio, if you're 50% out of those 10 trades, you're still going to be a profitable trader. And that's why risk to reward ratios are important. You got me? And it's also, I want to dig in a little deeper into that. It's per trade, meaning, let's say probability, like clearly you got the perfect setup. You finally found the perfect setup you've been waiting for all week, or whatever it was, all day, however, how all these hours, whatever it was, you found the perfect trade. You might say, oh, this trade I'm going 6-to-1 versus your normal 4-to-1. You got me? And it's a situation dictates matters kind of thing. You got me? So it depends on what's going on in the market. That's why I consider myself a discretionary price action trader, is because it allows me to not be so stuck to a 4-to-1 ratio. If I see that if I can get 6-to-1 and I can sit on something and I can go walk away after having a 6-to-1 or a 9-to-1 ratio, then I'm going to do that. And I'm going to have to walk away because I don't want to be looking at the charts, because I've already put in my mind that this is a 9-to-1 trading ratio and my stop loss is there. So it's no need to panic or worry. You got me? All right. So what session are you going to trade? Once again, there's multiple trading sessions out there. I recommend starting off, you just get into your routine. It doesn't necessarily, if you're going to trade with me, I do trade New York session, but if you're going to trade on your own, or if you're up late, London session is a great trading session. I want to say that starts at 2 a.m. Eastern Standard Time, I want to say. It's been a while since I traded, but I'm pretty sure it's 2 a.m. and it goes from like 2 to 4, 2 to 5. It's longer than that, but that's the most volatile time. And you'll see how, like, they say London session is actually the biggest session out of all the sessions, which is crazy because everybody thinks New York is the biggest, but it's actually London session. And then a lot of movement happens. So you'll wake up sometimes and see whatever you were tracking, it'll jump overnight, and it'll be because of London session and all the banks that open during that time. You got me? Just make sure whatever trading you have, I'm gonna say it again, make sure you are 100% focused so that you can lock in on your trades, and then being 100% focused will allow you to lock in on the rest of your day and let you enjoy the rest of your day because you locked in during your trading session, got your 5, 10, 15 trades in, whatever it was for yourself, and now you can move on with your day knowing that you had a successful trading day. And I mean, if you didn't have a successful trading day, that's where you do the reflecting and go back to, hey, where did I stray away from my trading plan? Ultimately, what a trading plan is supposed to do for you is stop you from feeling like you're missing out because you did everything you could within your trading plan. Now it's out of your control. You got me? All right. What lot size are you going to trade? Very important. Like I said, you don't want to over leverage your account. Your lot size as a beginner should definitely be 0.01. I believe me and Kane were trading 0.05. He's new to trading, but at the same time, he was with me, so it's almost like I get to walk you across the street as an infant, kind of. Not obviously you're my senior, but you know what I mean. It's just nice to be able to have somebody walk you across the street so you don't get hit by that car that was speeding around the corner. No one saw it coming. Not even no one saw it coming. You got me. So it's those type of things where that 0.01 keeps you in your safety. If you're going to do anything above a 0.01 or 0.02 even, you want to do it in your demo account first. Get used to how those numbers move. You don't want to be the person to be trading with real money and then all of a sudden you have a 0.05 up and then now you're down $150 and you close out the trade and it was a winning trade, but you didn't know it was a winning trade, so you close it out because you panicked. You got me? For whatever the reason. So you just want to understand how these markets work first, and the best way to do that is in the demo account. Demo account, demo account, demo account. You got me? As much as even today, I trade in my demo account more than I actually trade on my live accounts. You got me? And that's just because either I'm trying out a new strategy or just the fact because I'm building my trading disciplines, or if I have already made my 5-10 trades for a day and I still got that trading itch, like, oh man, I want to get in the markets, I'll probably just hop in my demo account sometimes. Enough for me to at least sharpen my skills. You got me? It's a level of growth and it's a level of discipline that you need as a trader, and there's a reason why I keep harping on it, for a reason. All right. So I'm sure some of you guys have seen this screen before, but nonetheless, this is what your lot sizes should look like per account size, depending on where you're starting off at. This is where you can stay in your reasonable point, and it would take a lot for you to blow any of these accounts when you stay in these lot sizes. However, if you're starting off with 100.01, you can at that point you need to be looking at a slower moving market, if anything, because you can make 10 trades and lose $10 on each of those trades, and that's $100 right there. You got me? So that's something to think about. If you guys have any questions about these lot sizes, nonetheless, give me a ring. I believe we were trading at 0.05 today. I think I got up to like 0.25 today. But that still fell within my range of the account size that I was trading. You got me? So nonetheless, you definitely want to take this into account and also understand every trade doesn't have to be the same lot size. If you know for a fact this is a high probability trading setup that you're seeing, and you see a whole bunch of areas of confluence, and it's going to head a certain way because of all the signs are matching up, and you finally got all the rainbows and all the colors looking the right way, then yeah, you might want to go to a bigger lot size, and that's how you capitalize on the times when it's good. Because I say like this: today we had a great day in gold, but if it didn't move that much, I probably wouldn't have put such a large lot size. You got me? So something to think about. Every situation dictates, every trade is different. Don't ever feel like there's even if price goes back down to where you started off your first trade at, it doesn't mean that the next way up is going to be the exact same. Everything's always going to be a little bit different, and you'll see that the more you trade. All right. So at the end of this trading plan, once you have all these details down and you feel comfortable, you have your lot sizes, you know why you're trading, you know what you're trading, you know what your exit points are, all these things come together. I want you to sign this on the bottom where they put a dotted line down there, but sign your name, state your name, sign it, and when you look to your left or right, it should be right there while you're trading. You got me. I'm telling you, this is going to be very vital. It may seem like small, but I'm telling you, this is one of the biggest things. Because if you look to your right, I'm like, no, I shouldn't get in this. I'm over leveraging because I know for a fact if my lot size that I said I was going to stick to was 0.05, then I'm sticking to 0.05. If I go 0.10, that means I'm stepping outside of my training plan. And anything that happens outside of your training plan, clearly it's on you, but it's something to give you a baseline on being disciplined. You got me? So I definitely would recommend that you sign your name at the bottom and kind of, really, really understand you're making a promise to yourself, but you're also making a promise to your why. Why are you trading? You got me? We're going to go a little bit deeper into trading plans a little bit more. Maybe we'll probably do like a part 2 tomorrow. We'll see. We might do a part 2. I feel like if we don't have too many questions right now, but if there are a lot of questions, or if there's something else that you wanted me to cover over a trading plan, I can. But outside of that, I think I might cover part 2 with a few more graphics so that you guys can actually see some more trading plans, or different types of trading plans rather. All next week, by the way, we're going to be going over indicators. Indicators, the MACD, the stochastic, the EMAs, all the different things that can give you signs in the areas of confluence because they're starting to match up, and your MACD looks a certain way, your stochastic looks a certain way. All these different indicators that are out there, you don't need them. To be honest with you, you don't need them. You can trade naked charts, but they do help sometime, and it gives you almost a comfort when you see, okay, hey, this, and this is lining up. So even if you take the trade and you pull the trigger, you at least went off of an area of confluence, and you didn't just hop in the market. You had some stature behind you. You got me? Outside of that, are there any questions right now? Okay. So if there's no questions, I'll go ahead and log off. If you guys need anything from me, let me know. Once again, you can sign up at lionswallstreet.com for your monthly membership, and then also for your monthly I'm sorry, for your account setups. If you haven't gotten your account set up and funded, or and you're lost on that side, give me a ring. I will be here for you. All right, get you guys set up. Let's get to the money, y'all. It's money season. I appreciate you guys. Y'all have a good night.
Thank you. See you later.
Yep, yep. Be safe. No problem at all.
Appreciate it. Thank you.
Yep, yep, yep. Have a good night. All right. Hold on. I saw something in the chat. Oh, okay. Yep, you too. Have a good night, Olivia. All right.